Hey guys, welcome to another video. Before I get started, thank you for joining, thank you for subscribing and slapping the like button on the previous video. It helps, so please keep doing it. Let me get seen, please, it'd be awesome. There's a lot of people on YouTube that are getting paid to do certain things, and it's not good. There's some fantastic YouTubers out there, especially the TA field. So yeah, I'd like to be mentioned with those people because they're awesome. So for me, talking about risk management is key. A lot of people tend to look at traders as, no, they don't make money. How do they make money? It's all about risk management, and risk management is key. I'm not going to go massively into it, but you could have traders with a 30% win rate and have very good risk management and still be profitable. You can have 60% people with alright risk management, do very well, and then you're never going to have anyone at 100%. People always try to be 100%, and I get it all the time. You go, well, you made so much last month. I'm currently at about 70% growth on my account at the moment, and people go, well, what are your losses? What about my losses? I'm 70% up, as in I've grew my account by 70%. What does it matter if I lose a couple? You're never going to get that gold standard. Now people forget that. Now when I look at Bitcoin here, I'm just going to put a little Fibonacci on here, okay, and just to kind of show you certain things. Now it depends on how you trade. I trade in a trend sort of way. I jump in on a trend and get out of the other side. It's like taking a train ride, really. And if you put any sort of Fibonacci on these kind of movements, you can kind of see where the coins could potentially fall down. And it's quite exciting to see that we've had a a nice little fib wick there, as you can see there on the 4 hour time frame. Now on the shorter time frames, this was pretty it was pretty mental, really. Look at that, bang, right on it. Now when you're going for volatility, it's always good to have a Fibonacci on there. And if you're trading on these sort of candles, and even on the 15-minute time frame, risk management is key. Now what you do in this situation, you'd ladder in. When you see this falling out of its arse, you'd ladder in some longs down at this region here, from this pivot point essentially all the way down to probably down all the way into this region here, okay. That is where you can average down, and when it pops back up, usually it does with Bitcoin on that Fibonacci, that's where you get money. Now that's all about risk management. That is averaging down your position. Now if that completely went tits up and it didn't do what it was supposed to do, you'd have a stop loss there. So if you were going long, say, so you'd ladder in a load of buy orders down from this region here, you just have a few little orders plonked in on this zone here. Now I'm just going over a previous trade, but this is what people don't do. They don't have any sort of risk management to kind of degree that, hold on a minute, there's a Fibonacci point here, we're dropping massively here. This is a one candle on a 50-minute time frame, it'll be dropping. You'd have to be pretty quick, but at the same time there was signs to say that it was going to drop anyways. There was a bear flag. I could, if you go into the 4 hour time frame and you look at, bear with me, this looks really scruffy. When you look at this region here, when you got a bear flag, essentially what it is a flagpole, and it pops back up, and what tends to happen is when it does that, it's a bear flag move, and essentially it means there's more downside to come. And it popped downwards, okay. Now if you're playing that, it just depends on how you kind of govern it, but you kind of have to be ready for it. Now when you see these sort of Fibonacci's, they hold incredibly strong support and resistance, okay. I'm going to remove these ladders now so you can actually see the fib. So with this being really strong support and resistance, they do help, because 9 times out of 10, not saying it happens all the time, but Bitcoin respects this zone all the time. So if you go into the daily time frame, again, looks like a mess, you can kind of see here what it respects. Now you can already see when it goes up, okay, we know it's going to do that anyway. We know when it goes up, we put Fibonacci on, it's going to do certain things. But you can see here, on the way up, it hits the pivot points. Now if you've never used pivot point standards, they are Fibonacci from the weekly candle. They are also support and resistance. They make very good support and resistance if you're a lazy trader. I'm quite a lazy trader. But when you look at this, it hit that and came back down, and what would you know? It pretty much bounced off the EMA 8 and went back up. Fibonacci number again is the EMA 8. So in terms of trading, you know what's going to happen when certain movements happen. You just kind of got to plan ahead essentially. Now when you look at this, it went right the way through that region there, the 382, and it bounced back pretty much just below the 0.5 fib, and it went right up to that area again there. So that, it support resistance, it always helps. Now, what you're probably thinking, well, this is all very, very complicated. Yeah, it is, and this is why traders have, a degree of respect in the field, and a lot of people think that TA is bollocks, and in some ways it is. It's like, depends on what you're looking for. You could overanalyze everything, and it just depends on what time frame you're on. It just depends on what you're kind of doing with your life. And the fundamentals of TA is not bloody having the most complicated chart. It's having a method that works for you. Now, if I look on Litecoin, for example, I put a fib on. This has been on here for ages, by the way. You can see here naturally what's just happened. It bounced off that zone here. This is the daily time frame, and off we go again. We're looking to get out of this channel, but we'll see what happens. It's already done this once. It went back up again. Went actually a bit, went right back up again, and then it obviously failed, and then it, it bounced. So, if you're looking to enter into coins, you'd enter on these zones, these little bounce points. Now, they're not always bounce points. That's why you have a stop loss. The stop loss would be there just below it. If you're going long, oh bollocks, right. But you've laddered in beforehand. If it goes to a certain point, it'll fuck off, index. And that's the sort of thing, which is good, okay? So, when you talk about trading and risk management, it's all about getting that great, that great entry. Now, great entries always help. Now, this is a 15-minute time frame. This is where the volatility is. This is where it's pretty cool. Certainly for me, with my method, I could quite easily jump in here. Okay, so when I look at this area here, like, I know this is halfway in the night, but when I look at my confirmations, it's kind of like this is literally nearly the gold standard, okay, when I'm looking at a trends. Now, when you go back and look historically at chart, it's quite hard to gauge, but for me, my alert system helps me. I have an alert on the MACD, okay, on the 15-minute and the 4-hour. On the daily, I have it on the EMA 8. Now, when I look at certain coins, what's going to tell me that's going to go up is the EMA crossover. It's going to tell me that over a period of time, that formula of price action is better in that day period. It means it's going to go up, okay, usually. But you got to use convergence and confluence and all kinds of little factors and time frames to kind of govern, is it going to happen? Now, on the 15-minute time frame, you have a number of confirmations. You have a MACD crossover, which is kind of on there anyways. You'd be guessing at that point, okay? You'd have to wait. You don't just go, oh, it's a crossover, go for it. You don't do that. So you've got the RSI there showing a nice little trend, okay? In terms of trends at the time, you would probably just seen that, not the most strongest trend, but you just grow it up and you just go bollocks, I'll go to the front there and we'll see what happens. That is a confirmation, okay? Confirmation that is showing a formation, a higher low, essentially. It's a trend. It's one of the 101 rules, okay? Looking at this though, you'd be wise to kind of, some people enter on these sort of formations. They'd look at one bounce and they'd go for it. They'd enter it, and until that breaks, they will not enter. It could have broke there. Literally, the next candle could have died. But you have a stop loss, don't you? You always have a stop loss. And yeah, I'm only saying that because I didn't make a stop loss on my last one and I cocked up a little bit. But when you're looking at this, that is just one confirmation. That is confirmation number one usually for me, right? Confirmation number two is my warning sign, the MACD crossover and the histogram, okay? Literally, this crosses over very, very late. It's quite an alert. Okay, let's have a look. You probably would have missed that entry, but you'd probably get the next entry. The next entry is probably more validated anyways because you're above the EMA 55 on the 15-minute time frame. A much better entry. You're guessing there. You may fall more on that candle and you may flap a little bit. But, obviously we know it goes up. But in terms of this here, confirmation number two, the warning sign, the MACD, which is what my alert is, okay? That is a good, solid indication. You've also got the histogram ticking over. Ticking over on the histogram is really, really good. Now, I'm going to go into the 1 minute time frame in a minute, and we'll see what these look like. But that is a good, solid entry for a trade. Then you've got the EMA 8 and the EMA 3 crossover, okay? Helpful. Now, that alone is a huge gain, right? When you look at it in the grand scheme of things, if you went in and around this area here, that it may not look like a lot to you guys, but if you're using leverage and you're getting out even on this crossover here, 1.38%, if you times that by 5, it's not bad, is it? It's not bad at all. Or times 3, whatever. So that is kind of what it is. But when you're looking at volatility and you're looking at the 3 minutes, this is what it would look like on the 3 minute time frame, guys. Crazy, absolutely carnage. And this is where you get the money. This is where the volatility is, and you just get in. And again, if you look at the way it's formulated or whatever, it's literally bang on. That is the bounce point, okay? That is the bounce. But that is kind of pretty much where your RSI will go from to where that peak is, and you go, right, there's an entry here. There's an absolute entry here. And you look at that crossover, which is more bang on this time. It's a lot more aggressive. You've also got histogram tick up again. You know, that is just depends on what time frame you're using now. It's all about risk management. If that didn't happen and it did not go up as it already has shown, you'd have a stop loss just below it, below these wicks here. Now, this is how tight stop losses can be. Going long, you're FOMOing on this candle, okay? Boom. Below these wicks there, 0.26%. It's not a lot. If your time's not by 5, you've lost a couple of percent on a move. It's not a lot at all, okay? It's a couple of sats move, but you know in your head that you've just got yourself a pretty awesome entry point because you got your confirmations. It's going to go in that way. But you know, when you're looking at it from this point of view, when you look at the 15 minute time frame, it's a bit safer, okay? And again, if you do this again on the 1 hour time frame, this is the move, okay? Ooh, look at that. It's a big move, guys. That is the move there, okay? And again, crossover, histogram. The RSI, that is actually a double bottom, which indicates it's going to go up anyways. So yeah, that gives you an insight, okay? So risk management, I know I've just waffled about trading, but in terms of risk management, it's key because if you have a method of entry and you have a method of a pull out, literally a kill switch, you're going to do okay because the risk and reward of these trades are going to always go in your favor over the longer period of time. So if you enter on this candle here and you're aiming to get out over here somewhere, now in terms of your stop loss will be so little and your reward, that is, you know, a risk reward of 3. So you've got, you know, it's a lot better. So you can afford to lose 3 of them, but if you win 1, you even, so 3 to 1. A lot better, isn't it? So if you win 2 of these and lose 2, you're in profit. You know, that's how it works. So risk management is an absolute key asset, and you should be using them. You should be using every sort of degree in your body to be safe trading. Now, this means do not trade a massive amount of your portfolio. This means practicing on paper. This also means using stop losses at all times. Something that I didn't do yesterday and I got burnt for it. It's one of those things, okay? So when you look at this, don't look at the overcomplicated stuff. A lot of people tend to gravitate to Elliott Wave because they want to predict it. Yeah, you can be absolutely banging at calling Elliott Waves, but that one time when you don't put a stop loss on or you FOMO into a position and you get liquidated, it hurts, okay? It really does hurt. So make sure you're always covering your ass. So yeah, if you like this, slap on a like. I know I've thrown a lot of trading technicals at you. It's always good to know what you're on about, really, but you know, you can't guess the overall direction of a coin when you're in such a small market. You've got to get on the trend and get out and set your exits and set your stop losses, and you just got to kind of hope that your TA is correct. You can't just guess. It's not guessing. It's if you know what way it's going, go with it. If you don't even enter the trade. So there you go. Risk management. You can make a hell of a lot of money. Certainly if you can grow it and compound it, it makes a lot of sense when you do it with experience and practice on paper.